It's time for our daily recap and trade dissection for Tuesday, February 11, 2025. I'm Sam Morton, and I trade the E-mini futures. You're looking at the daily chart of the SPY. They gapped lower at the open today, but the bulls managed to push price up to close slightly positive on the day. As you can see, though, this keeps price right in the middle of this triangle consolidation. We won't be talking about longer-term bullish or bearish targets until price gets above or below these trend lines. Daily closes above the upper trend line, and the bulls have a better chance at climbing to new highs, and daily closes below the lower trend line, and the bears have a better chance at pulling price down to some lower targets. It doesn't need to be any more complicated than that for the time being. As we touched on in yesterday's recap video, as time goes on, intermediate levels will become apparent, and it's those kinds of levels of support and resistance that we use for our intraday futures trades in the S&P 500 E-mini futures. What did those levels look like for today? Here they are from the game plan that was emailed out to the VIP crowd before the opening bell. You're welcome to read through this and picture what you might have done with this information about 35 minutes before the market opened. And here's the entire day on a 1-minute chart. We can see in detail how price reacted to our levels. We'll run through the trade setups for how you would have traded the levels or not traded them according to the process that we use here at Ticks&Trades. Price came up early into 603.05. But we don't start trading until after 15 minutes into the open session. So at 9:45, we're looking for opportunities. At that point in time, price was above this 603.05 level. In the event price would come back down to this level, we would have an order keyed into the system to buy ES contracts, E-mini contracts, the moment the SPY touched 603.10. So why not 603.05? It's because adding a 5-cent buffer or a 5-cent adjustment toward the levels will usually help in getting filled in more trades. For this level, though, it was a near miss. They came down within 3 pennies and took off and would have given enough points to hand over a base hit trade. That's 4 ES points. So that's considered the trade, and it's not worth taking another long trade at that level. That's just one of the rules. So it did not come into fruition. No official long trade at 603.05 because of that near miss. But you could have had an order entered and keyed up to go short with ES contracts the moment that SPY touched 603.95. And check out how factoring in that 5-cent buffer here would have pulled you into this trade perfectly, this short trade. The original level at 604 even was not enough. That 10 o'clock news, Jerome Powell had a testimony release, I think it was. Price spiked up to 603.97, 3 pennies shy of that 604, but you had it at 603.95. There's your short trade, at least a 4-point base hit, probably more because it was a quick spike. That's how you would have traded that official base hit trade number 1. We're not going long again down here at 603.05. Not going to go short here at 603.95. Already done it. So the next opportunity was at 604.78. It was 604.78 for the morning. I already had it adjusted. So 604.73 is the operating level. This short trade gave you another base hit after giving it some time to develop. No rules were broken during the time this trade was active. And so now no more short trades at this level for the rest of the day, the 604.78, officially 78. Price came back down into 604, and we have not gone long at this level, so you're welcome to take a recycle trade. It's what I call a recycle trade, same level, different side. So 604 becomes 604.05. So you're long at this point, and by the way, price came down, and while they did hit the 603.05 level, adjusted to 603.10 to the penny, they kept there. That would have triggered another long trade, but if we're going to play by the rules, we can't just pick and choose. We already did it here, so it's not valid at this point. That would have been really nice because that combined position would have given you basically 2 base hits. What they did, they came up within pennies of your base hit profit target here. I'm hovering over here at 604.45. That's the equivalent of 4 ES points. Pennies away, 1 or 2 pennies, probably within a tick in the E-minis. They came back quick enough to your entry point. That's a near miss of the profit target, and by the rules, you would jump out at a wash, not knowing if that was it. You missed it and they're going to go lower. In this case, it would have worked out, but you can't pick and choose your trade outcomes if you want consistent forecasting data in the tracking logs. So we cannot count this short trade here, just a wash. No profit pulled. Nothing else on the board at this point until price got up to 605.63. It was actually 68. So 63 is the operating level. Already had it adjusted. And that did give one more base hit before the closing bell. So 3 official base hits, 12 S&P points for the day if you were playing by the rules. I've got a recording here of a trade that I got into. It wasn't until after that 10 a.m. jolt that I decided to go long at a place that I thought price could bounce a little when they were coming back down. And so I didn't trade anything up to that point. Really wasn't set up until right here was 9:50 something. So I'm kind of looking at things, deciding what to do. And I'll just scrub ahead here and show you. You can see the 10 o'clock jolt didn't do anything. So missed that 604 trade. That's why I'm making these levels dashed. When they're coming back down, you'll see me go long with two contracts kind of in the vicinity of this area. And they kept going lower. So I bought two more contracts when they got down to this 603.05, 603.10 level. So you'll see the limit order show up on the E-mini screen in a minute. So I'm long two, looking for a 4-point base hit, but they went lower, and I'll scrub ahead here and show you that I got filled with two more contracts down near the level. So now I'm long 4 contracts total. I know going long down here would not be in agreement with the rules, but at this point, I was looking at the big picture, just willing to wait around for a bigger bullish move to start developing. So I'm long 4, and at some point, I decided to take 3 off and trail the remaining contract to see how many more points I could squeeze out. And some interesting things happen, and I don't have this sped up too much so you can see it. I'll just try to explain it. So it's coming up to, so here we go. I changed it to 3 contracts. I'm long 4. You can see what happened. I would sell 3. If that were the case, I would have 1 left over. I can trail up. But at some point when they got close to here, I kind of inadvertently clicked the sell at market button twice, not realizing I was doing this, multitasking or something, each with 1 contract in the queue. So that kind of got me messed up. I mean, I sold the contracts at a profit. It wasn't a problem. It left me with 2 long. You'll see in a minute. Average entry price drops when that happens. So right up here. Okay, so I'm down. So basically I'm long 2. And I realized what I'd done at the very last minute. I adjusted this just to sell 1, my remaining, or just 1. So I would have 1 more remaining. And it happens pretty fast. There we go. I was adjusting it. So now I'm long 1, and I start trailing it. So I trailed this up for a bit, and then I identified a good target about maybe 4 or 5 points or so to the north. Got filled with that when a nice little spike happened pretty fast, and I was out for the day. So this 1 contract I'm trailing, I'll try to move ahead here to when that happened. There we go. Put a target up here, and then watch what happens. Really quickly, I got filled, so I didn't need that trailing stop there. So that was it for the day. I was out and done. About $1,100 for maybe 30 minutes of work. I'll take it. And let's let this run until about 11 or so, right before 11. That was it. Didn't mess with the market until I got back in front of my screens to make this video a little while ago. And over to the tracking logs, you can read the notes for the playing by the rules log. Here's your 12 points. We already talked about how it all happened. And the Sam's trades, effectively 5.9 points on 4 contracts, pretty much at that level. You saw how I scaled in. So 1180. That's a wrap for today. Thanks for watching. Hope you found some value in it. Appreciate the support on the channel and those of you who are putting enough trust in my analysis and levels that you have requested them for your own use. And I hope they're working well for you. Again, if you want to try these levels out for yourself, I'm happy to add you to my list. And I'll provide them to you each morning via email. Go to Ticks&Trades.com. There's a form in there that you can fill out. Once I have your email address, you'll get on my list. You'll have levels to trade or experiment with, whatever you want to do, each morning. Thanks again. I'll talk to you in the next recap video. Have a great day.